Hey, how's it going, Maze?
How are you? Sorry, the mic was far away. I was like yelling, screaming into the microphone. How goes it? How goes it? Yeah, so going all right. It's kind of interesting price action um, today on the market. On the whole, got kind of some runners, some just kind of dead in the water. Most kind of in the middle. Nothing really major though. I mean, I've got pretty even green and red. I'm not seeing anything too crazy here. Um, I think Apple, didn't they beat, I don't know, something like that. I was reading the news, but kind of skimming through it. Even though they were like computer sales were down or something, they still beat. Just kind of scrolling through here. I guess there's yeah, there's a few of these that are kind of all over the place. Oh, did Ethereum get delisted? That wouldn't surprise me. I haven't looked at Monster in a while. I might look at that one today. This was another one that I kind of liked, but I've been so out of it for so long. With some of them, that are on my list. Got to get back into the groove here. Anyways, we'll just start with AMC. It's the, it's the favorite. There's really nothing like particularly bad about this current price action except for the way it closed yesterday. And that's pretty much all I could say about that. This was clearly a double up thrust through the resistance. I think that much seems pretty evident to me. I wouldn't. I know it doesn't quite look like it right here because I have it on regular trading hours. I'm moving my chart around a bit too, but the make sure I have this right. But it to me it looks like in extended hours some of the main creeks that I had were pressed on these last two push-ups. Here's why this is kind of confusing, because volume has been so-so, but it's been higher, obviously since we dropped. And I mean that like as in, if I were looking for a massive breakout, I probably would want to see a larger buy-in. But there also is like this sort of consistently high volume right now, and part of me just thinks it's probably because, I don't know, probably just because it's at $3 and it's near earnings. So most people, I mean, would find that to be a bit of a bargain. That might just be why we're seeing this kind of elevated volume here. And another part of me looks at this and sees a lot of symmetry in the volume as it compares to that drop that happened. This is kind of interesting. Again, because we're not really near that. We're sort of buying back up towards that line. So we're creating this strange like padded region right here, right at like 350. And that could be a good or a bad thing. Part of me thinks that it might be a way to sort of disguise a future floor, and they did it in a way that most people wouldn't expect, which is to trade really heavily around it and then right above it rather, and then right below it. And what I mean by the not expect is like, I guess when we normally go through a range, like the previous range, it's kind of obvious where the trading's happening because you can see like the tops and bottoms really easily. But then when you look back and you kind of relate that to the previous range, you can see that like the sell-offs, the high sell-offs are kind of right above where these high sell-offs are once you're in the range. So you're kind of creating this like padded surface around $5.30. These are the 50% markers, and that's when I was doing that slingshot. That's kind of where they were. So they definitely are creating like liquidity floors on or near those, what I think are like 50% markers down to the 237 bottom. They're not 50% markers though if you consider the bottom to be 167, because we were thinking as pragmatically as we could. We were thinking like, well, what can we do to sort of disprove that this is the bottom, and like instead that we might need a lower low, because every time we've hit the floor we've kind of bounced and then distributed and then dropped again, and that's been the same thing that's happened over and over and over again on the way down. So what would make this any different, you know? And I mentioned yesterday that the fact that this didn't break above the high on the second push and had a much more natural feeling climax, as opposed to these ones which broke high early, which was a very clear distributive type action. So it immediately went from like, oh, this is the buying climax, to bottom, to we're advancing too early. So that's a up thrust with high volume, and that was into earnings. And then we dumped and immediately made a new low. So that motion right there is a distributive motion, like going from the tippy top down to the very bottom and pushing the resistance and then immediately dropping and making a new low. It just showed that there wasn't any real stopping power. And then we have a huge high volume spike right afterwards here where it drops down. And that was on, what was that date? March 24th. So, you know, I had been questioned about it a couple times because a lot of the folks in the Discord, I don't know why, because to me, like, when I see stuff like this, I guess in my mind, I kind of take it for granted that everybody's on the same page about these kind of motions, but I suppose that's not always the case. And these two downward pushes are like the highest volume in the whole range. And so the highest volume occurred after moves to the upside, and then they really occurred in pressing back down. And that tells me that the spike to the upside is being absorbed, right? All that buying is being absorbed very quickly and being pressed back down. So much so that you spend a lot more time in the upper part of the range than you do the lower part of the range. And another thing that might be kind of hard to see is that reality. And maybe part of that's because this is a sinking range, like everything's kind of going downward and not really staying afloat. But even if you just break it apart into like a 50-50 zone, which we can do very easily on a platform like TradingView, because you can take, I'm going to do a regression trend. You can take a channel and it has like a 50% line typically. So you can use that, or you can do it a different way, but you can just take a look and see at what point, like that UT is a sign, but you could also just look at, all right, well, where have we been trading the most? And it's pretty obvious when you look at that previous range that it just didn't look right. Like we're spending a lot of time in the lower half. We're spending very little time, and except for these up thrusts, we're spending very little time in that upper half. The reason I wanted to do that really quick is because I think we need to do a similar analysis right now. Like, I know I've got my price targets. I know that those price targets are probably decent. And I'm feeling very good about those price targets. I think short term, though, there's a desire to kind of read the room and see what might happen at earnings. And it does drastically impact the longer term, of course. So we want to do the right thing and try to make sure that we're doing a quality analysis. And part of that, of course, we could look at things like RSI on different time frames. We could look at indicators like the MACD, money flow index. Those are really good ones. You could look at a few others that are, pretty solid. But the big ones to me are always volume and price. I mean, those are the easiest things to compare, volume to the price. And price, it sounds weird to say price as like an indicator, but price action maybe is a better word. Like price in and of itself is neutral. It is what it is. It's just a representation of the current value. But price action, like how the price is moving, where it's moving to, how long does it spend? So maybe it's like time as an indicator, time and price. That's what I think of when I think of price action. And that versus volume, those are pretty decent basics, right? For all trading, of course. But I like to think of them like indicators because it helps me to remember to check them often. And to remember that those are probably the first thing, if not the main thing that I should be looking at. So, all right. So yesterday into close, we had this kind of fake move to the upside. And I don't like that as a move because, again, it kind of just looks like it got bought up and then immediately sold back down. Both times we've approached the same level. So it hit that gap fill and got sold. And on the one hand, there's no gap anymore. So like that's easy enough to understand. Yesterday's move means that there's no longer that gap right here. Okay? So you don't have any kind of assurance based on a gap. I know there's more gaps to the upside, so don't hear me wrong. I'm not an idiot. There's a ton of them up here, right? And we could go all the way back through time and probably find pretty major gaps all the way up to $44. And I do think long term, that's probably by design, that those gaps will be filled over time. I really do. But just short term, local gap is gone. Okay, so that's a kind of a given. So that gap's been filled and it got sold down pretty hard. We did on the sell down make a higher low. So even if I were very bearish on this, what I couldn't say, hey, have a great day. How's it going? Hey, CPR. Sergio, Timmy, day night. What I couldn't say is that it was just like this, where like you hit the top of the range and then went to a new low. That never happened here. We did have a double top, but this comes lower and it didn't come high. It did come down and make a new low, but like I said, technically that could just be a phase B type bottom. We have a lot of buying here. You can see there's a massive amount of buying, even just compared to the previous buy up into earnings. And maybe that might be a little hard to see on this chart. So let me move my screen so you can see it. I give so much real estate to RSI right now. Yeah, so you can see the difference between this here, and I would even argue this whole area right here. I would include that as part of this kind of buying up, because you're buying up and you're buying up from about 50%. And then compare that to like the previous run up into earnings here. And then again, you could argue maybe even like right before. I know I just moved that thing. It's pretty weak, right? Look at the difference in these two areas. Just significantly different. And actually what I might do, since this is kind of hard to see, if I can, I always forget how to do this. It's funny, like I always do it when I don't want to do it. I think you can do this and just go, what is it? Move to a new pane below. There we go. And then we can separate the volume out so it's easier to mess with. Yeah. So again, like we're looking right now at volume versus price action. I'm going to hide the RSI too. So I want to just really focus on volume and price for a minute in this range. And my gut, I'm just going to be honest with you. My gut is telling me it's not the same as last time, but I also know that my gut can be very wrong. So I'm trying to like make sure that I'm doing a good job of remembering like this operator has done different things at different times. And sometimes the immediate look of something doesn't tell the whole picture. Like just because there's more volume here doesn't mean this has to be a bottom. And that's something that's just, you know, hey, we're running into an earnings and we're down near $3. It could just be that just brought in more volume, you know. Again, I don't want to make it seem like it has to be a certain way just because the volume's different, but it is different. And I think that's important. So I would say there's significantly more volume into this move as opposed to the previous one. And I would argue more buying. Now, the sell downs that we've had 2 of them. I would mark those as well because they are obviously like protecting something. Your shorts, pretty clear, right here and right here. And those 2 markers, again, like which one of these looks distributive, which one looks like, it's kind of obvious. Like this second one is distributive in this little area on this top. Again, because you already had like a push to a buying climax, very, very clear buying climax. So now I'm going to like kind of zoom in a little bit and just look at this little area for a second. And I want to make a very short case because some of you are going to be like, this is super redundant. I already know this. But you can see that the volume on this buy-in is increasing up to a point. Yeah. So sometimes it might seem a little bit hard. Hey, no. 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 My cat chewing on something. Sometimes it might seem a little bit difficult to sort of identify like where's a buying climax at. And hey, what's up, Jesse? And what I'm trying to say here is that if you pay attention to kind of like peak buying volume, that can often tell you, but sometimes it's not always clear with the buying volume. Like back here, it looks like there's an early buying climax, and you can see that the price continued to rise. So the tricky thing is identifying that, yeah, that happened, and then this is like the finishing of that action. And the finishing of that action was a wedge that was ascending, and it never broke the trend. So as a result, even though like, yes, clearly like this was a buying climax because it was a push, it also indicated, oh, well, that was a breakout of the previous level. And it's important to note, like this is a buying climax, and so is this, like previous. This was ascending to a particular level. You have peak volume, and then you have the breakout, and during that breakout, you get a larger amount of volume. But does it look like, we're on the 30-minute time frame, so if we did it on like the hour, it would look different. Is it the high? No. And did it break the trend afterwards? No. So the rest of this is just an ascending triangle. You can see it right there in the very peak. And it didn't ultimately break the trend until after this point. So this becomes your buying climax here, even though the volume was like diminishing. Okay. That is not the case over here. So like the difference in the 2 should be kind of obvious, but one of the main things is that this did break the trend. So we lost our trend. And I know that you could kind of cut it different ways and say, well, maybe we didn't really lose it. Maybe it's wider, blah, 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 blah. I don't think so. I think it's pretty self-evident that this was the trend. We lost the trend, and this clearly is the highest amount of buying. So what that tells me is that basically we had an upthrust. So if you're wondering again, like how do I know that that's not just a buying climax? Why do you think that's an upthrust? Because we already dropped the trend. We went back down and found support. We rose back to the top, and we pushed above the local range. Yes, it's the gap fill. It's gone. Yes, we didn't make a lower low here, but the point is like this is now, in my brain, I'm now thinking of this as its own range. And I'm not talking about the trends. I'm not getting to that just yet. That's part of the analysis. But, and then of course, like after you have that buying climax, there's a sell-off. It's pretty significant volume. And then we get another buy-in, and it goes all the way back up, makes a new high. Now, maybe at this point, we could debate, and I don't want to get like anyone's feathers ruffled. If someone's out there and they're like Wyckoff Supreme, and they're looking at that and they're like, no, dude, that's the buying climax because it went highest. My argument is you don't normally see that, in my opinion, unless it's a UT. Like once you exit that main trend and you've reached the peak of that buying, once it breaks down, if it goes at it again, you're always at risk at that point of it being an upthrust, because what you're doing is you're either signaling like an early SOS, which is pretty rare for AMC. It almost never does that and works in our favor. Supposedly that's a thing, because I've seen a lot of chartists online who do Wyckoff look at charts and say this is an early SOS in a reaccumulation. But for 99% of the time for AMC, I've not seen that. Usually if it pushes up again, that first, it becomes like what I call like the paw or like the first ear of the cat ear. That's not a good sign. It's like that's an early upthrust. So it's already come down to find support, and then for some reason it came up too high. That didn't happen here in this range. So the reason I'm like mentioning it the way I am is because in the previous range, we had a pretty clear buying climax. It left the trend, pushes back to the top early. You get a massive upthrust here volume-wise, and then a massive dump to new lows, and it goes all the way past the bottom. Not the case for us, although it did go past the bottom. Instead, we topped off very modestly. Then we got this massive sell-off. So we didn't try to advance too early. Okay? But that being said, what happened yesterday at the end of that was an advancement, at least of this widening trend that we see. Wasn't it an advancement of the larger range? It was not. And that's kind of the one saving grace we have here, is that I could look at this and say this was bearish, this top right here was bearish, but only really bearish according to this little range that was formed. And that little range is self-evident, but you can, I guess we should draw it out. Probably be a good idea since we're talking about it. Let me get those. I wonder if I could use this one instead. Kind of like these, because they give you like the halfway point. So here's where I would run into some like questions. Like as a little range, is it safe to say that, hey, this was, as it's ranging out, this was your buying climax. This was really a secondary action and a reaction that essentially tries to advance too early, and then it's sold down and drives the price low. The good news is that at least so far, it has not driven to a new low. So what does that mean? Well, remember what I said about early SOS. It's not impossible. And again, this is a frustrating chart because you, just like anything in Wyckoff, and frankly, and the stuff I do too, is like you can look at a range as large or as big or as small as you want. This little top right here is a range, It is. And so is this little top. And so is this little bottom. And so as we're looking at it, you kind of have to put it into context. I don't think this particular move right here is very bullish in the short-term range. It would, to me at least, possibly signify a drop beyond this bottom at $3, which isn't really that far. So it's not like the end of the world kind of thing. But then you'd have to look at the bigger range and say, okay, well, has it done anything thus far that makes me think the larger range is ultimately distributive? And I'm of the opinion that I don't think it has. Again, I'm not like going to argue that this couldn't be like a cat ear setup or like what I call like that four top thing. I don't think that that's something I would want to argue, because like I'd probably lose that argument. Like, hey, Booksy, we've seen this before, dude. But in comparison to the previous range, it's not the same. Does that make sense? At least the minutia of it isn't. So some other folks are probably going to look at it and say, man, you're making it too complicated. It's made higher highs, it's making higher lows, so it's still good. Yeah, and if you're wanting to just kind of find a default, that's always the best default. Is it making higher highs? Is it making higher lows? And when did that change? And so thus far, like, you could basically say that it doesn't really matter what you think this is, Booksy. Maybe it's distributive locally, maybe it's not. Ultimately, it never really changed the direction of anything else going on, and that would be true. Because all we had was this kind of ABC-like correction here, and maybe it's going to be a fifth wave here down, and that's when we're going to see it come below like 280 again. But does that really matter? No. I mean, and that's what I'm saying. Like, it's kind of moot. So I could see this being like a fake out. Somebody in the Discord mentioned they thought this was like a bear trap. Maybe. But to me, it still looks like that double sell down is protecting 350. So there's a desire to not go above 350 for the time being. And somebody's got a whole bunch of sell orders there to stop the advance of the stock. Pretty straightforward stuff. And so until we push over 350, and is that even like new? No. That's why I was kind of like, well, it's not like great that we had an upthrust there because it looks like it got sold down really quick. But that's not really anything new. Like we already knew that was the ceiling, and we already knew that somebody was going to try to sell from there. Like your sellers want to hold their support. And from their point of view, it's making lower highs. So like you have to remember, you can flip the chart and you can see like, well, it is making higher lows, if that makes sense, like lower lows and lower highs. And we're looking at that in reverse, so it's kind of confusing. So for a bear, like they probably would look at it and be like, well, who cares? So what, It could just be like a little local move down, and it's still going to do this kind of inverted head and, or it's still going to kind of break out like it did before. I'd also like to warn people about the head and shoulder business, because there's been almost every single time there's been this kind of presumed inverted head and shoulder. It's this guy right here. This has happened almost every single time. And I'm being sincere. Like I can go back and identify this repeatedly. It's not that it can't be a head and shoulder that's just faking people out, but it's just not a very reliable pattern for us on AMC. And I'm trying to like find a better way to draw that. But I think this has happened like half a dozen times, 6 or 7 times on these moves where we get this kind of head and shoulder like action that looks like it's ready to turn around. And I made a point last earnings that I don't think that's a reliable pattern, because it hasn't happened here, but it does happen like frequently on AMC. If you go back and look at our charts, like there's one like here, there's one here, like they're all over the place. So do I think that that's a reliable pattern to trade for AMC? No, not really. It just doesn't really work out. And I think it's a pretty primary example of like the short operators game here, like what they want us to see. They want people to see that and think it's about to have a big reversal. So we got to be mindful of that as we look at this present time frame, that any kind of head and shoulder action probably be met with some skepticism. And no matter who points it out, if I point it out, somebody else points it out, I would just be like, well, maybe, but we want to make sure that we get the proper breakout. And I don't know, to me, this is pretty easy. Like, it's the same exact story we were telling before, which is, hey, we could go down. I definitely could see us making a move back down to try to get below 280. And that makes sense to me as a spring region. But at the same time, we don't always spring. So I've got this kind of back of the pocket, you could call it, idea that there's a probability of going down here that might be significant. But I also think that who really cares? Because if it is a spring, then you have the opportunity to buy low, but ultimately, like, a spring would be very violent in reaction and would still need to come back up and push over this 350. So just like in the previous time frame, if we were looking backwards, and I mentioned it a lot back then, is like, hey, we need to have confirmation over 5. Like, that was the confirmation target, was like, hey, we need to break 5. And if we don't come back above 5 and find support over 5, there's really no reason to be bullish, because they can set up all they want to set up with inverted head and shoulders and blah, 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 blah. But if it doesn't break out, who gives a crap, Excuse my candid nature there, but who really cares, right? So, all right. Anyways, back to this. Let's get back onto the little local analysis. So I was saying, like, we could draw out a little range here, and it might help us to see where we're trading more. And here's where I think this kind of, again, it's like it changes maybe the way that you see it just a bit. And that is, let me lighten this up a bit. Hang on. That is that 50-50 rule. And I don't think it's such a rule that has to be like perfect. Like, oh, it has to be exactly 50% and then you have to do some kind of percentage thing. It's just a really common way to understand price action, and it's easy enough to do, so I think it's worth doing. And I actually think we're trading a lot more in the top of this range than we were previously. And that's what I'm trying to get at, is like it's significantly better, although it's not perfect. To me, this is significantly better than the previous range because we've spent a lot more time with high volume here without actually breaking the range. So that's the key, is like high volume at the top. Well, Booksy, we did that here. Yeah, but we also broke the range and then dumped, you know what I mean? That's not good. But we haven't really done that here. We've kind of like had high volume in the top, dipped, high volume. And my big question is, does that mean that we're probably going to go, or do I still think that there's a probability, again, that we have a spring-like action? I think the answer is self-evident, that it certainly seems very possible. This happened to us back in March. March is a really great example of this, where we spent a lot of time in the upper half of the range preparing for a massive move to the upside. And I reference March all the time. But it's such an easy to read example of this kind of price action that it makes it silly to kind of ignore it because it's so simple. And I don't know if it's going to be like the same kind of a big move, but it helps me to kind of ground myself and remember that there's still a larger range at play. And if the operators at B want to drive the price to further the longer range at play, then that could still happen. So this is March 2022, and it starts around January, where you really kind of hit that bottoming period. This is what I'm referring to right here, this price action. And what's significant about it is we definitely spent way more time in the top of the range. And I think it's easy enough to see that. And you can see, interestingly, you can see the difference. Look at the first two up thrusts here, these two guys, and see how they are kind of, we're like losing, well, like I wouldn't say we're losing steam, but like they broke out of that downtrend during those two moves. And I mean, obviously it starts low and then breaks out. I don't know what I'm saying during those two moves. That makes it sound confusing. But this was part of that final breakout, and it's a change of direction. We made a higher high. Now it still gets sold down really hard, and then you see this like low bottom that had fairly low volume until it picked up again and then made another higher high. But then look at how it changes almost immediately. Then you have a lot of trading up top in the upper 50% here. So you spend like the first little bit during the turnaround. Okay, so during the turnaround, there's kind of more trading near the bottom, half of this supposed range. But then notice how quickly that changes. It's like, again, it's kind of like this perfect like back and forth, where it goes from being like, we'll just say, we'll make it red for distribution, not because it's like inherently evil, just because it's there. It's easy for me to do red and green. And it kind of ties into the red light, green light thing, so that's fun. And you can see how like during this time period, there's like an inversion. So let's call this resistance. Let's not call it like distribution, because that kind of makes it sound wrong. But you can see like there's an aversion to this advancement here, but then look at the aversion to going lower here. And like it's the same exact area. You see how it reverses, like in both cases? And then notice that like on the whole, we spend a lot more of our energy after the bottom, which again, if you look at where that bottom is, the way I drew it kind of makes it look like the range is like really low. But in fact, you'd probably say that this was the reaccumulation because it all occurs after, you see that? So it occurs like after the jump over the creek. So that jump up, there is a selling climax, but like then there's this kind of secondary range, and we kind of find a bottom early and then drip right through it. This would be like your initial bottom. This would be like your phase B type bottom. And so you can see like I'm drawing it in a weird way because I'm using this bracket instead of using lines. And then when we get to the end, this is your SOS. And notice that like the SOS is really far up. Like it's super high up. And that makes sense because in this particular case, it's kind of like what we're experiencing now. Like we just did this kind of push up where we did come high, we kind of advanced, and then we retreated, but we didn't retreat by making a second UT up here. Instead, we stayed low. We did come down and make a new low relative to this area, but not relative to the larger bounce. And then this ends up being distributive. Like this is a distributive top. And look at where we are here versus where we are now. This was an earnings back in March. So it says March 1st. And I remember on March 4th, you got that final cat ear, and then it dropped, and it went low, and it went to a spring action. And the rest of that is kind of history, Then you go into a retest, where you retest 1, 2, really you retest all the supports back up. All these supports down bottom, if you draw lines across, you'll see these are bouncing along those as it goes up. Each one of those being bought up, and then of course you get to the end. And there it goes. And one thing I remember very distinctly about this area is it was the inverted, there was an inversion, if you want to call it that, on the shrinking iteration idea. It's so far gone now that some of you are probably, very few people would remember this because it was a long time ago. 2 years ago, and I was doing things a little differently with my charting then. But this upward motion had a shrinking iteration going into March 4th. It did not break to the upside after that. It broke down. And so I have to tell you, like, that's what I kind of see right now. Is not necessarily that it can't go. It's just that I could see this making an LPS or I could see it making a spring because it looks to me just like that. To me, it looks exactly like that shrinking iteration kind of bit that went on. You're getting this kind of buy-in. So again, like, did we completely change direction down here? No. This was a very minor change of direction. So if I take this, I'm going to start deleting a couple things real quick. Again, just to kind of clean up the chart. So it's a little less chaotic. So if I take this as like a simple kind of, this is what it is. I would look at this and say, look, did it change direction completely? No. We've yet to advance above, by anyone's argument, we have yet to break out over this creek. So we have not advanced over the larger creek. No one's arguing that, never would say that. Did we break out here of this trend? Yes. And again, maybe you could argue that the trend starts back here and really like we did break out and it happened over here and that's what this retest is. Okay. Either way, it's still over the top. So it doesn't really matter. So like, again, where did we get that buy-in? This is why I had this second mark drawn where I had it, which is right around like 280. And I've been talking about 280 a little bit on the Discord group. 280 should be on everybody's radar because it's where ultimately we found support. So there's this reaction that occurs. We all know that happened. There was a big buy-in. Then the volume dissipates. It's gone. And then where do you get the support? Right at like 283. So 283 to me is the floor. And then you've got the 282 mark came back down and it didn't make a new low. If I'm not mistaken, it was close, but it didn't make a new low there. I'll double check that as we go here, but when we get there, but I don't think it did. I'm pretty positive it didn't. So then what am I looking at right now? I'm seeing like a series of repeating M-shaped buy-ins. Like I'm seeing this as just like a giant S-curve that's got the M shape and then it has the breakdown and hook. And then I see the exact same thing happening here. I see the ramping of volume the little drop in the middle, right, in both cases. And then it looks like it happened again, but higher. And then it looks like it's trying to do it again, but it's kind of running out of steam. And this is where I'm kind of like stuck because the volume here is so high that I'm a little confused as to whether or not it's actually distributive. It looks like there's a lot of ground that's being held, but I'll warn you, I want to warn you, as if this breaks down, it's going to be really bloody. So I really got to warn you about that, because if it's a rising iteration, and that's kind of what I think it is, and it is bullish on the larger picture, but not on the smaller picture, we could be in for it, and it could be a really nasty slide right at earnings. And I really would just urge you to draw a simple trend from the bottom to the next bottom. So if you're looking at it, you'd be looking at the low here of like 247. No, that's not it. What's that low? I know it's 239. So the low here at like 239 to the low that happened at around May 1st. So this comes down to like 284. 284, I think is more accurate. Let me zoom in, double check that number. 288, 284, 284, 288. Yeah, it looks like 284. So what does it mean, Buxy? Well, I think what it means is that there's a probability here that we make a spring or LSPY around, depending on how you look at this on the whole, around 284. And then if we did that, so like say, for example, let's say for example that right before earnings, we get this like nasty drop, okay? And it goes all the way down to like 281. If at that point you find support on like 284, and you take off towards the top, that's really bullish. And what that would do is, in my mind, is kind of solidify a probable breakout. And my expectation would be that we would just kind of break 350 and go. Because that to me would be like a local spring action, right? We could do something similar with an LSPY, but we'd have to at least drop beneath 304. Does that make sense? So like there could be a change of character, and we could have an accumulation anywhere beneath, because this is such a small little top. This is not the end-all be-all, and because it didn't affect the larger range, I don't see it that way as an end-all be-all. I think as soon as you get beneath 304, then that's why I said 3 is kind of your ideal level, because you're watching that, but that was before we got that upthrust. So at that point, you're like, all right, whatever. Anywhere beneath 304, you're looking for a change of character. Okay. And that could happen because technically in this range, this tiny little top could be distributive, and then you could come down and the buy-in could be technically above 284. Like it doesn't have to be below. And that would be a LSPY, not a spring. If it did go below and it recovered, it's a spring. Pretty simple, right? It is simple. I'm very hesitant about saying that that's the most likely situation because of that March example that I just gave you. I would love for this to happen just like this. I think this would be one of the easiest to read things ever, and if you announce something like a Billie Eilish thing, I think somebody mentioned that, I think at that point, it's possible that you get that kind of squeeze. I don't think it's out of the question, okay? That this could be this early kind of movement. But if I were just looking at that March example, the one that I was kind of just talking to you about, I would probably be inclined to think that what's more likely is that we drop here, we come below 262, we bounce, and we basically have a little I don't know how to describe this, like a little mini distributive top again, just above 280, and then we come back down, and this is where you would hit like an actual larger term spring. And this is one of those things that, when I was looking at it, I'm like, well, I already had that consideration, but I had considered it going really far because on the macro, if this turned distributive, wouldn't that happen? Yeah, it could. And I think it all has to do with stopping power. And it has to do, again, with whether or not this is actually a buy-in. And if there's no stopping power and these bullish moves are just shorts covering, then we're screwed because as soon as you get to this low, it's not going to hold. It's just going to turn into another distributive top and dump. You know what I mean? It's just going to look like an LSPY kind of bit. And I hate that for us, but what we should see if this is bullish is that this basically comes right back up and finds support. So like every one of these scenarios might seem like there's too much to choose from. So what do you choose, Booksy? What about that scenario where it just goes, I don't know. I mean, like I was saying on Discord, this is a lot of volume. And it could be that this is the buy-in that the long operator was like looking for. And they're not interested in a fake out here. They don't need to get shorts jumping on. Although that would be to their benefit because if they get these shorts dumping the stock down in earnings, they could really quickly like squeeze them out enough to they could break out here. And I think you kind of liquidity crises, if you want to call them that, almost always demand a spring. I don't know if I would call this a liquidity crisis, but I will say that the lack of stopping power on the bulls part has been very concerning to me. And the fact that we haven't really had massive buy-ins since we first dumped, and we already know that this was like distributive at this point, it kind of bothers me. Like it just doesn't seem like the volume hasn't really been there. This is the first big pickup we've had in several months. So this is unlike the last earnings. The last earnings, this was very weak. And I don't think looking back, you could make an argument that it was strong. And even at the time, I kept saying I thought these two tops looked really distributive. And I was just waiting to see if it was going to make a lower low, and it finally did. But it was painful, because it happened over weeks and weeks and weeks. We were just sitting here waiting to see what was going to happen. And then ultimately, it didn't even bother at this bottom. There was zero stopping power here. They just cruised right through that bottom and went to that new low. So, when I look at stuff like this, yeah, like there's already folks that are saying, hey, it's just the exact same thing as last time. It's not going to be any different just because the volumes change a little. And you might be right because, a part of me, again, it's like, well, this is earnings. It's at $3. It's not been this low for a really long time. There might just be a whole lot more people interested in buying it. And if the short operator is still running their game, they're just going to take advantage of those people. So who's to say, And I agree. That's certainly a possibility. But in the grand scheme of things, based on all the analysis we've done over the last few weeks, I'm just going to stand by it this time, and I'll own it I don't know how else I could own it, but I'll own it if it doesn't work. But I really think that it doesn't really matter that much if it goes down this time. I really think that there's a very strong probability that this is the end of this kind of downtrend. And I would use earnings if I'm an operator, and I'm not, but I would use earnings as a short trap. Like I would use it as effective bait. I would dump this down and let it drop, and I would go for a spring. I just would. That might frustrate you because you're like, well, I don't want to do that. But I'm saying that based on what I've seen here and what we're seeing here, it almost makes more sense to go ahead and drop it and get the spring and take off than it does to just take off. I wish there was a better way for me to describe that other than just saying, like, I think there's a liquidity problem. I'm pretty sure AMC has a liquidity problem, and their problem can be best solved by trapping as many shorts as possible and then not waiting too long, but then reversing it. And the fun thing about AMC springs, if you want to call them fun, is if we do get a spring, they don't last very long. They're like 9 to 12 trading days. They're very short. We've only had like a handful of good springs, but they've all been really short. So the good news is that it would not be like a forever thing. That's not how it works. A real spring, especially on AMC, is usually very quick. And the main reason for that, of course, is that part of a spring is that they're buying it up as quickly as possible, but they're also going to do a short squeeze. because they're going to move from bottom of the range all the way back to the top of the range after a spring action. Again, those are descriptions, they're not prescriptions. So that's ways of describing a spring action. That's not exactly what we might get. It's more of an educational thing. Makes sense? Well, you got to understand, Roadrunner, that lending out shares is easy to do when you have a lot of money. Like they can buy a lot and then lend them out. And that's not unexpected. That's what I'm saying. Like if this were an accumulation, that's why I'm thinking like all this buying, this high volume up in this top area is probably a good thing for us. More than likely. Oh, you're referring to GME. GME's pumping. Well, yeah, if GME is moving, that's a good sign. I don't know if the gap filled here on IWM. It looks like it did. Or got close to it. Close enough at this point. I don't really care. I do think this is exhausting itself. The volume's dropping. RSI looks kind of meh. I said it yesterday, but it's kind of the same thing today. I thought maybe we could get a bounce yesterday, and we did. It stayed on this trend, but then you can see it broke that trend today. So IWM looks like it's primed for a more, let's call it official pullback. Maybe it's not going to be huge. Maybe it'll set up another trend. I think it's likely coming back down. Let me see if I have GME on this one. I don't want to talk about charge point right now. Charge point filled its gap and it's sort of just chilling. It's not really moving anywhere. I did not expect charge point to have like some massive move just yet. It's already run a lot. It needs to cool off, find support. And I felt the same way about GameStop. Yeah, so this is mixed. It's a mixed bag. I mean, we were just talking about it. I don't feel it's hard to sort of see it. Just watch the trend. It's pretty straightforward. This right now looks like it's trying to advance again, but it's doing it on less volume. So it's pushing back towards the top. It never broke out. And I think that's worth mentioning is that when it hit that 1742 area, it was still within the larger channel down. So there's no major breakout yet. Is this a possible, quick reaccumulation? Maybe. Time will tell very quickly. Once it hits 1742 again, you'll know. It can advance in a breakout. It can advance on lesser volume if you get that buy-in. But I'm seeing it's making little higher highs here, but I'm not seeing any kind of increase in the buy-in. And I'm seeing that RSI is kind of curling up. That's on the 1 hour. Let's go up a time frame because it might look really different on 4 hour. Okay. Well, yeah. Yeah, I mean, if it goes to 22.24, it's a breakout. It's gone. I think it'd be flying. Because I think that's a jump. I really don't think you can argue with that move. If it moves that high, that's over, way over. That's way over this lower pocket. It's back in the previous range. It's over the massive long-term downtrend. So I would say, yeah, I think it's a jump over the creek, and it probably would be really, really violent with some sharp pullbacks, kind of like what we saw here. GME is one of those stocks that it has the ability, and it has done it before multiple times, even after like that big squeeze. It's had the ability to have those kind of massive moments of upside, and you don't get these long breaks. You get quick breaks, sometimes followed by more advancement. I think right now, I don't feel like I'm ready to say yes yet to GME. I know that's going to bum some of you out, but I don't think it's advanced just yet. And this is a fib level, but it's also, you can see it's a previous support and resistance. I don't really see it as advancing beyond the top yet. So I think it needs to make another go at 1742. And then I think if it can do that, you might see some real fireworks that make even this look kind of meh. And I know it's like a lot of buying. I know there's a lot of volume here. Don't get me wrong. There's just a strong chance in my mind, and I made a small case for it. It's not like the craziest thing ever. But I think there's a decent case that this advancement fails and we actually head back down to 15 by about earnings. And I know, like I just said, don't work off the assumption that an inverse head and shoulder is going to work out. But a lot of times this is kind of what you see in an advancement, because we came back above that trend, but we haven't checked it. Does that make sense? So we've advanced back above this trend, but we haven't checked it. And that to me would indicate a bit of a weakness, like on the side of bulls. Like, you have to remember, like, the bulls want the stock to advance, but they also want to buy. And they're not afraid of, like, a real bullish advancement has no fear of pullbacks. So if you're somebody that's like, no, we can't, I don't want to pull back, I don't want to do that, that'd be too bad, we would end up failing. Well, then it's not ready to run, like that would just be weakness. And so in the event of that, you've never really had enough of a buy-in anyways. It was just a short squeeze or something. So for me, I'm like, looking at this like, oh, we've got a problem of making sure we check support. Maybe it did a little bit, it came back down to, here's your counter argument. I love giving myself grief over my own TA. Your counter argument is that, well, maybe that already happened, but I think that was the preliminary support. I don't think that was I think it was like a preliminary supply kind of thing. I don't necessarily think that this range has to be finished just because. And it would make a lot more sense to me if we came back down, not because of this intersection, but just because it makes sense, before in advance that we formed an actual reaccumulation here on this bottom. So I hate to burst anyone's bubble, but unless you're back above 1742, hey, y'all, it could happen tomorrow. Tomorrow this thing could jump up, find support on 1742 and like take off. But unless that happens, like I can't really endorse that idea that it has to go right now. Y'all are like, you're an idiot, Booksy. Look at that move. Yeah, well, it's done that kind of stuff before and turned around. I mean, it's not even, it's like evidentiary. You don't even have to like take my word for it. Just go back and look. There's been these really strong advancements that have been shut down. You want to see it get that support higher, and I think ideally it happens right here. It happens on this trend. So in my mind, it's probably 15 or like 1490, and it may make the most sense to happen around earnings. We'll see. And if I'm wrong, then you will see a very strong buy-in. This weakness, this apparent weakness right here will be bought up. And when it hits the top, you'll get a strong buy-in. It'll break out and then come back maybe quickly, and retest 1750. And either way, if you're looking for that to keep running, 1750 is not that different from 1670. which is kind of about where we are now. So, like, I don't know what the rush would be if you just really want it to go and you're like, no, it has to go. You're just talking crap. Can the RSI run up if that many shares are locked in and not moving hands? Well, RSI is like we call it a not leading indicator because it relies on the data backwards. And so it's predictive in that it's looking at time, like it's looking at moves over time, volume over time, to indicate strength. It's relative strength index. I'd have to go look up the formula, but it's a pretty basic formula, but it's looking backwards. So does it matter if someone's holding shares? No, like holding shares wouldn't affect RSI at all. So like that wouldn't have any impact on RSI. Only buying and selling should impact RSI. But if you're not selling, right, it probably wouldn't get oversold as fast. That makes sense. Potentially. I mean, I don't know. In theory, I guess, if the volume is really low on selling, it might take a little bit more to get it to be oversold. I don't know. That's just my idea off the top of my head. Again, I'd have to look at the formula because I might be a little wrong about that. It's been a minute since I saw the RSI formula. The benefit of if the whole buy and hold mentality is that you are not giving shorts an out. In order for shorts to buy back their shares, people have to be selling their shares. If there's a market inequivalency there, then, and this is why the naked short thing became such a big deal. If there's a market inequality there, then you get a squeeze, basically, which is just a bunch of covering, but nobody wants to let go of their shares. So it drives the price up really rapidly. It's sort of like supply and demand. If I have let's say I have like 30 cows and there's now everybody suddenly needs to buy milk. I don't know, this is a stupid example. If me and a few other people have cows and everybody wants to buy milk, but I don't want to sell my milk, and then the people next door don't want to sell their milk, it drives the price up because now there's like a high demand for that milk. The supply is low in that case, right? And the people who are trying to sell it don't really want to. It's more valuable to them to keep it. Stupid example, but it's effective enough. And there's a lot of math behind it. The short squeeze, the technicals of short squeeze are true. The problem with short squeezes is this idea of synthetic, quote unquote, synthetic shares. And I only put it in quotes because the jury's still out, I guess. There's a lot of debate about what that really means. And some people don't believe in it. And some people really, really believe in it. Some people think it's mathematically a given. Some people think it's mathematically impossible, or it doesn't matter. You know what I mean? So if you're asking me if buying and holding affects RSI, it does, but only because it's doing so by affecting like the underlying volume of selling. So it would have to have some effect, but there's no way for me to quantify that. I mean, nobody could. It's not possible. Like you would have to know exactly, like on every single level 2 interaction, you'd have to know what's the difference between what would be happening if people were willing to sell versus people just holding. And I just think it's not possible. Like it's one of those questions of you just don't know. I mean, technically you could, if you have money, you can accumulate shares indefinitely. You know what I mean? Just like shorts, they're not supposed to be able to accumulate shorts unless there's a share matched to it. And that's the whole thing about naked shorts is that like you're opening up a short position without there actually being a share found, a share to lend out. In the case of AMC, one of the bigger problems with that stock has been the fact that it's been one of the highest grossing lending programs. So the operators have been buying, not just selling. And that might seem strange to you because you're like, well, the price has been going down. Why were they buying? A lot of them are buying and holding shares and lending them out for a period of time, and they're making money on that. And there's so many shorts that want to drive the price down. They can make a ton of money on it. And it's, I guess, part of their trading plan. There must be a reason, and I'm not a market analyst. I'm just not. I like analyzing the charts. I'll pick and choose what I talk about a lot. There's probably a really good reason why a institution might do that as opposed to just straight up shorting a stock. Instead, like lending their, there must be like another reason. I don't know exactly what it is, but maybe it's a liability thing. I don't know. Yes, buy and hold reduces the number of available shares, again, because they're not being actively matched in a trade that sells. That's the concept behind it. The problem is if naked shorting exists, and I know that's going to tick some people off, but if naked shorting exists, it means they're allowing people to short beyond the amount of available shares. Which is why that guy from Fox Business was probably, I don't know if he's still doing it. I haven't really checked on that in a while, but he probably was one of our greatest allies in terms of like an ape movement, because he was very, very vocal about how he didn't feel that shorts should be allowed to short more than 100% of available shares. That's a big deal. But unfortunately, you've got guys like Adam Aaron who did a little tiny investigations, and I don't know how big they were, but they felt small to me. He did a little investigations and said, we have no evidence of synthetic shorts, so we can't do anything about it. And even if we could, our job is movies. We're not here to upend the market. We've made our reports and we're done with that. That's what he said effectively last time. So he's basically told shorts, hey, if you're out there, oh well, like we don't know how to stop you, and we're not going to take a stand. And I always felt like early on he could have easily have lobbied a little bit more. Like, he's a prominent CEO of a well-known company. He's got tons of people behind him in the movie business that would probably be pro AMC if he had just been vocal about it. He didn't need to change anything. You know what I mean? Like, he didn't have to discover synthetic shorts. All he had to do was like be a lobbyist, basically, and to get people involved. If he had done that and got people more organized and involved and at least cared enough to do that, I think he could have made a significant difference. Instead, they did their investigation. They decided it was beyond the scope of what they were capable of doing. They just basically said, not my monkey, not my circus, is what they said. That's what Adam Aaron said. He's like, well, it's not my business. It's not our business. We got to focus on our business. I can't fault him for that personally. I think that, even as an individual, like if you told me that you're not called to do something, if you're like, man, I just really don't feel like I'm called to do that, I don't think I can give myself to that, then I would be like, okay. And as a company, they're not people, they're companies, but they're made up of people. And ultimately, as a company, it's hard to really fault a company for not wanting to get involved that way. I understand the argument that like, oh, well, they wouldn't even be here if it wasn't for us and blah, 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 blah. Yeah, maybe, maybe. But there's a lot of institutions that also believed in AMC back then, that did buy AMC. And there's been many that have owned AMC shares and will own AMC shares. So it's never just been retail. Institutional ownership has increased a lot. over the last couple of years by comparison to what it was early on. I think Ape played a huge part in that. And I know for a fact that that was part of the reason. I mean, I know for a fact. I think we all know at this point that was part of the reason that Ape was created, was to steal the vote away from retail so they could do what they wanted to do. And it worked. So look, GME, I'm not busting anyone's butt here about GME. If you like this stock and you want to buy it, I'm not going to say one way or another that you should or shouldn't buy it. I am going to say, though, that for GME anyways, I would just be really careful and watch this top. This kind of a buy up with the dropping price action, as soon as it makes a higher high, if that RSI has come down a lot, it just tells you the buying pressure might not be very strong. And it wouldn't take a whole lot for someone to start a distribution cycle if they don't have enough to advance. In the event that this is a short squeeze, they should have enough to advance. Even on lower volume, you will see it, and it will be really violent, and it will be good. It will be violent, and it will be good. And it would be really obvious, because at that point, it would just be like, all right, well, it's made higher lows, it's advancing, and then it'll break. That's where you'll see the big buy-in, because that's where you'll see smart money go, yeah, we're moving forward. There'll be a sign. It'll be a signpost. And you'll see $1 million buy-ins, multi-million-dollar orders and all this other jazz. None of that is confirmed yet, so we're still approaching that level. And again, I'm not trying to bust anyone's bubble here, because I know that there's a lot of people that like GME and they want to move. All I'm saying is these both have the same markings until you get to the second top, which is that usually you advance on strong volume. When you drop, your volume tends to kind of evaporate a little bit. I don't know why I don't have the other one up. So you'll advance on really strong volume. You'll get a drop. You'll get low volume buy-ins as you go back up. But then what needs to happen is this particular top right here is that you need to have that. That's what you want to see, is like that smart money kind of buy-in at the top where it's advanced and it's not being beaten down by sellers. So therefore it'll hold. Then you'll see a big buy-in. That would be a breakout. On the other hand, should you breach the top here and you get that nasty sell-off, you've got a huge divergence here at this point and you're in bad shape. And not like indefinitely, but I know it sounds weird, but if it's going to reaccumulate, it's almost better to just go ahead and break down before you make a new high. We were talking about that all the first hour of the stream was, and I don't want to switch away too much, but like that's the problem with this right here. I know this happened in earnings, so the volume's a little bit skewed, so it may not make sense. But any other time this has happened on AMC and we've like come down and then try to advance again, and we've advanced on like weaker volume or an RSI divergence, and if we break over that top, it's almost always been like shut down like super hard. You don't want that for GME if you want an advance. It's almost better to go ahead and just back up and just go ahead and go back down and get the shares you want if you're not ready. So my thought is fairly straightforward. I think if you advance here, you want to advance. Like you need to see it buy up through, maybe go up to like 18 or 19. I do think you want it to come back down. And then you want to see the volume like almost evaporate again. Like there's no real sellers. And so you want the volume to basically evaporate again back down to like 1745. Go back down to like piddly numbers. And then push again. Make sense? That's kind of what happened here. You can see like that drop. There's a strong push and then it drops back down. And you can see that support at 1528 on GME. That was good because you see that was like very little selling, but it really wasn't moving anywhere. And then you get this stronger buy-in on the creek jump there. Stronger relative to the selling. Not strong relative to everything else, but strong relative to the selling. So I don't know. I could look at this, I guess, way up close. May get a better picture. Yeah, I mean, that looks like a reaccumulation to me. And then there's an advance. That's an SOS. So it's going to go up now to the larger range top. And we'll see if this is like a phase B top or if we're going to go ahead and break out. Yeah, you can see the ramp in volume. So it is ramping. That's good. It could be a good sign. You want like a steady volume increase without like going straight up parabolic necessarily. You kind of want to just kind of steady ramp. But yeah, to me, like a jump over that level is a huge, huge deal for GME. And if it did it right now, it's kind of bizarre. I mean, think about how long this has been. That's historic. How long this thing's been in a downtrend, and it finally breaks it right now on a Tuesday. May 7th, kind of strange. That'd be weird. Just like feels really random to me. Yeah, Einstein, I'm with you. And I'm with you as well, CPR. I don't want you guys to think I'm like anti-naked shares. I believe that synthetics exist. I think the evidence is there. But for you to prove it, it's nearly impossible. And that's why the SEC was like, they basically said it's not sexy enough for them to pursue it because they can spend years investigating something and they might prove it, but they have very little to show for it. And the rules against it are not like severe enough. They're just kind of slaps of the wrist still. So unless that's changed in recent days, I haven't really been paying attention to the SEC after they kind of, I don't know, didn't do anything for anybody. Yeah. I don't know, man. This could be a big breakout. I guess I'm like one of those people that I'd rather be safe than sorry in these kind of moments. Because it could be, but it's just one of those things. Wait for that confirmation. Here's the other thing. I don't know if it's Isaacs or LSX 454. That's another really tricky question, is like the share count is a really bizarre thing to me. Because technically you can own the float multiple times over and then it's constantly in flux. So yeah, it's a hard one to pinpoint. Price projection from restarted. I'm looking at GME's chart right now, and my general idea here, and I know it's not popular, but my overall thought is that if we don't see the advancement presently in a short squeeze type action where you jump, and volume's picked up a little bit, but you still see how it's like less than the previous two pushes. I want to see it push and basically not meet strong resistance at 1745-ish. It's around that area, 1750. That would be a jump over the biggest creek that GME has. And if that happens and then we get a very low volume pullback, I think it could then just rip. My bigger concern is that if it pushes above the recent buying climax, which is significant, and it does not advance in volume and it doesn't advance past this creek, that you could end up with a massive sell down, kind of like we saw here, that breaks this kind of larger trend, and then you really were going to just probably build out a range. If that happens, I think 1488, about 15, I think that's going to be your range. It doesn't have to happen. I like being wrong in this case because it would mean a lot of people would make a lot of money to the upside. So, you guys, don't hear me wrong. I don't want it to just break down just cause. Like that's not what I'm saying. I just think this kind of price action is always suspicious until it makes the move. locally, it made a little reaccumulation range. It had a little SOS. That was that tiny little buy back in you see right above 1528 here. That's healthy. So that to me looks like it's done. But then like on the big picture, it's not finished yet. We would need to come above the buying climax in an SOS motion. And then even then you could have a backup, and you'd want to make sure at that point that you don't go below that backup, or you'd go ahead and just break out and test the resistance that you broke. So the backup would take you all the way back down to this creek, this downward motion here. So even in the event of an SOS, the backup is kind of at a bad spot because it's like way low, you know? I don't know, it's kind of an all or nothing proposition. I said earlier, it's almost better if it doesn't advance too soon if we're not ready. And I know that market can do weird things during a market squeeze, and you might just have it go. If bulls are strong enough, it won't matter. They're not going to come back and check this. They don't need to. You don't have to do that if you have no liquidity problem. You just don't. So an SOS here, if you went over the top and came back down, you can see why that would be an issue, because it'd be a breakdown of this trend, and it'll also come below that previous little micro range. And then also on the big picture, it starts looking a whole lot like a UT, which is an upthrust. And again, this is only if there's a liquidity problem and they want to reaccumulate here. It's actually kind of better just to go ahead and do it now. And that's just sort of where I'm at with it. So part of me doesn't, I know it sounds weird, but part of me doesn't want it to advance early because I want to I'd like to see the range form out more so that there's more definite yes. It's like a thumbs up kind of thing. But, you know, whatever. If the volume's strong, it'll pick up, it'll get really strong, and you'll get that break. And I don't need to analyze that. That's kind of straightforward. Also a little bit nerve-wracking because we're only an hour away from close, and a lot of stuff that happens into close is tricky. So in the event of a UT, which is an upthrust, a lot of times what happens is that you break above the range and then you come back beneath it right before close. And that can make for a very distorted kind of view. Yeah, I don't know. AMC, somebody asked about price projection. It's debatable. I had a long 30, 40 minutes talking about this top versus the whole. And I'm just being straightforward. This top to me still looks a little distributive locally, but that only really means that it probably would come down below 304. One thing that does get me like excited is that these two massive sell downs didn't result in breaking to new lows. So like the strength of AMC in this lower area is different than it was last time. And I made a case of how this particular downtrend looks a lot healthier than our last one. So the hyper bullish person here would be like, no, dude, it's going to go up. And then we're going to have this pullback into earnings to retest the creek. And that's okay. I mean, if that's you and that happens, great. Like you've done it. You know what I mean? You got a really good call out. I'm always of the skeptical kind of person, and I want to see certain things that make more sense to me. There's a lot of strength in this move yesterday, but it was nonetheless like it was a weaker buy-in than the previous, and it went higher, and then it got sold down. And the one saving grace here, and it's important, is it made a higher low, and I mentioned that. So That's like right here. It made a higher low at 306. It didn't immediately go to the top and then slide all the way back down. I think that 315 is like your 50% mark. And I think probably and frankly, we may not even see much of anything until earnings. We might not see any price action. It could go sideways all day tomorrow, and it would make sense to me because that's the center liquid right now. You can't see me, but I'm shrugging. I'm kind of like in this place of like, well, this is a great place to either find support or rejection, no matter which way you go. So rejection might look like that, and support might look like this. It's probably going to happen right around 315. And then a local creek, 304 and lower, you'd want to see a change of character right down here if you're going to reverse. Otherwise, I would say we're probably heading towards sub 284. Potentially, I don't know why I think 267 is so important. I guess it's because it has to do with that 50-50 stuff. I still think that's important for some reason. And so I've kept it on the chart, but really like the lower low would be beneath the previous bottom, which is like 238. So simple enough. If you don't like the guesswork, then it's very, very simple, which is just don't worry about trying to catch a falling knife or catch a bottom. Just wait for the SOS. Like wait for it to break up, find support at 350. It could happen really fast. It could take a couple of days. Doesn't really matter. That's where you would see, this is where you would see the biggest buy-in anyways. Like it would be even more significant than what we saw in these moves. My gut is telling me that this looks a lot like that March 4th earnings where you're going to get a drop and then maybe a spring action even really, really low, before it turns and heads back to the top. I haven't really looked at MPW at all today. I'm not super concerned about it. It does have an earnings. It says Thursday now, so I guess they moved it. I thought it was Tuesday. Or maybe I'm just getting confused with something else. It's possible. Maybe it was always that. I'm a big fan of this chart. You guys, I don't pump stuff. I've been accused of pumping things. I don't pump it. I really don't. And you don't have to invest in this. If you don't want to, don't. I'm invested in it. I think it's a really good play. I can tell you my reasons, or I can just show you the chart. The number one thing is that I think it's really undervalued. If you look at the historic valuation of this versus where it is, it's really low. The second thing is that this is a massive sell-off, which I get scares people. It's also a huge widening. And it's at this place where it's kind of made these sort of moves before and headed back towards the top of the channel, which for us is still pretty high. It's up in the 6s. But if it were to break out and reverse, much like what happened back in COVID, I think it's going to head back up probably to $24, nearly to the top of the channel. So that's kind of why I think this is a good play. There's a lot more to it maybe than that. It is a real estate investment trust, so if you don't like those kinds of things, steer clear. You don't have to worry about it. I'm personally going to play leaps on it because I think it's a really good play. I made money on the downside short term. I have not touched my position to the upside unless my stop loss triggered. I don't think it did because volatility hiked up quite a bit. There's an earnings this week. This top isn't particularly bad or good. I think it might be like that inverted head and shoulder business that we often see where you're going to come back down into earnings and then probably push back and try the top again around 5. That's probably where the decision will more or less be made. But if it is an inverted head and shoulder, this is your neckline, and it has not yet punctured the neckline. So that means that, at least for me, like that's still an open possibility. To approach the neckline again and break out would be really bullish. And if you just want to know like that target and you're kind of interested and you're like, well, I don't know, what's the simple target? It's 51% of 261. So, you could look at that, add a couple pennies to half of 260, and you got it. So, I don't know. Was it 75 cents? 75 cents now. 125, 125, so 130, 130. So maybe around like 132, $1.32. And that makes perfect sense to me, looking at this, because I'm like, well, $1.32 gets you back to the 644 top. It gets you back to the outside of the trend. And that's assuming that it follows this trend up, which is an assumption. But if it did, it would make sense that this would come back to here. I mean, it's literally like the inverted head and shoulder target here is like literally the last support it had before this lower range. And it also would probably coincide with this outer portion. So it's not like this thing's broken out yet, but it's already got a really simple target. It's a pretty easy to trade. If you don't want to buy in, you could wait till that break. Then you'd have a pretty good move. 26% is a nice trade. I'm trying to find better trades. And another one that I've got that may not be the most popular right now is this one. It's Cube Smart. It's a little bit of a steeper buy-in. It's $42, but even back in December, it was undervalued, and it was about the same price back then. So locally, I think it's jumped this creek or come close to it, close enough that I think I would say, yeah, it's probably out. It's very, very tight though. Like it's in this portion of like, it could squeeze down or up still because there's room below. But I also see it as very similar to the previous. It seems to be a bit of a widening spread to the downside. Long term, it hasn't really had those moves, that we might expect from a turnaround. And I think that we're just kind of waiting to see if it's going to make that move. I don't think it's made it yet, but longer term investment on this probably would yield a pretty significant return. If this bottoms out, I don't see why it can't easily go back up 50%. And it's another REIT. I haven't really talked about ChargePoint at all lately. The thing about ChargePoint, I talked about it yesterday, I guess. I said I haven't talked about it at all lately. That was dumb to say. I don't know why I said that. The thing about ChargePoint is it's kind of at this place where it sort of broke out, and then all the same, it just sort of sat there yesterday. And so I'm not convinced yet. It hasn't reached its moving average. And frankly, the moving average on the 4 hour, you can see is like right above it. The reason I say it kind of broke out is because it broke back into this trend that it had left behind. And that's fairly significant. So at this point, I'm a little bit unsure about what to expect next. If it holds that trend, it could be forever above 170. If not, I do think it'll come back down, because if this is a larger spring action here, you should see it come back down and retest 156. And that could be a very significant place and a good buy-in. And I think, yes, like locally, this is what I was mentioning about kind of broke out, is it did jump this guy, which is really significant. So it's kind of it's like it had a significant breakout, but it's not quite done yet, if that makes sense. It's like, okay, well, good. It jumped the creek, but now I want to see that retest. And then you're in a phase C. If that's the case, if it makes the retest successfully and advances, then you're in a phase C situation where you should be heading back towards the tops. The early tops are at like 230, and then the next tops are up here at 350. May not seem like big numbers, but when you start looking at the percentages, this could be a really, really big trade. It's 100% returns on just shares. It's pretty significant. All right, so there's a little rejection on GME, so it might be the start of something. I don't know, and I know that I jump around a little bit here and there, but I've been really pretty happy this week with my trades. I've only been back in the trading atmosphere for a few days, but I was pretty ecstatic about this backup here with that push up. I still think we might need to find some footing, so we're not quite out of the woods yet. We really need to see it kind of make sure it finds footing and then advance, because right now it did kind of what I thought it might do, which is it sort of teasing out this possible head and shoulder. Happy with that price action. I know that like that is a problem. You don't want to see it reject again off that mark in weakness. So that would be like the buy-in is weaker, which is obvious. I mean, of course it's weaker because you know you're in the middle of a trend. But then the sell-off would be significantly stronger. I don't see that sign on just the first two motions here, so kind of inclined to feel somewhat comfortable about it. Like there's a mild sell-off. It didn't even really eclipse the buying. This sell-off obviously would have to be compared as a head, which means you have to include all this buying. It's not significantly higher than that right shoulder or the left shoulder. So you would watch and see if it does have a pullback, what happens with the volume on that pullback here. And this is not the chart I was using. You can tell there's nothing on here. But I did think it was going to come back down and then try to advance again. So I actually exited some of my IWM 230s. But I'm still very bullish for it. I think it's going to go to like the 230s. I think it's going to be a significant move. 220s, 230s. Probably back up to about 225 or so. I'm just kind of waiting, because I'm not convinced it's just going to run. I think we might get a little fake out head and shoulder action and then advance. I don't know. You know, we did something like this back in the COVID bounce. Like after we hit that mark, you can see this is very similar right here. This crossed that weekly. And we're not crossing it. We crossed it earlier this time, but you can see that backup that happened, that double move. That's very similar. It just has the same vibes. Like you got that same kind of acceleration here, and then the drop back, and then this is your SOS with a backup, and this happens in the middle of an S curve. And there's a very similar, in my opinion, it's a very similar vibe here, because this is at the SOS for this range, this lower range. You got this kind of narrowing that happens going up. You got a backup, and we're just kind of waiting to see. And I don't know. If it comes back down, again, it doesn't have to go all the way. It could do something like that, where you get a little bit of a double bottom kind of deal, and then advance. It just depends on the timing. And if it doesn't, then it'll probably look just like this, where you advance and then very quickly come back down and then go. You know, it's not very complex in that regard. The level that we're at right now is the previous floor, so it's very significant. And that's why I'm like sort of vibing the feeling like that. Oh, we might just knock our heads on it once and then try again, because it's a very significant level. We did come over top of it during that quote unquote head action, but it wasn't to the point where like I was like, oh, it has to be super distributive. It was more like that top looked weak because it had a double top on lesser volume with an RSI divergence, and it was a narrowing, so it looked like it was wedging. So all of that kind of led me to think that we may not see an advancement right away, and that's why I thought it would pull back, and then it did. So now we really want to see it kind of easily get over this, find support, and then go. And my guess is that it would probably have to advance beyond maybe like 214 or something, come back to 205, and then just take off if it went that route instead of coming down first. Down is like if the bears are strong enough here and they want to reject it, they could probably drive it down for a head and shoulder action and see if they can successfully drive it. Otherwise, to me, this is like pretty straight up SOS. And this is just a creek backup. You know, we talk about those things a lot, and then you see it happen, and you're like, well, there it is, you know. It just backed up. But it came below the creek. Well, yeah, it did. But it's hard to see these things when you're like zoomed out, but you can kind of tell that this is where the advancement happened here and the support happened. So there's a pretty clear evidential line right here. You see that? That's where the M cross happened. That's where the creek more or less is. And that's where we came back to after the advancement. So not like, again, I figured 294 or 194. It ended up coming lower than that. It went to like 191, but it was pretty close. This concerns me a little bit more, you know, this idea of the like RSI turning down. I don't think it's the end all be all though. I think we could see it bounce and then rocket. And it might be appropriate given the fact that this is a big move and we need to cool that RSI a bit. And look at what happened previously, sort of similar anyways, back in COVID. It jumped up over that 50 mark. We came down, it's on the RSI, it kind of has that head and shoulder vibe, but it did dunk through it, push above, drop, found support again, and then raced up. Yeah, so could be good. What else is it? So GME is backing up a bit. Nothing really to say about it just yet. Could be just a tiny little reaccumulation before a push. It could be because they don't want to drive the price up during the end of the day. I'm actually kind of happy about that because I don't want them to push the price up. You know what I mean? And then have that UT action. So this is actually good. Some of you are going to be angry that I said that. But listen, either it does or it doesn't. And as a result of whether it does or it doesn't, you want to see certain things. And I would be more comfortable myself if it didn't. And we went ahead and broke down and got that reaccumulation range and it advanced. If you're somebody that's in calls or you just want to see this thing finally go, you're not going to agree with me. You're going to say, look, I don't care about that garbage. I don't want it to spend any more time. I want them to just rip the faces off of the shorts and go. So forget all this reaccumulation talk. And it happens. I mean, that's what happened during the squeezes that happened in 2021. It happens. I'm only worried about AMC, but it's good for the GME people. I don't feel like there's a strong... I know that there's always been like this kind of distinction between the two, and people say that GME is like the only real squeeze and this and that. I generally kind of agree with that sentiment because I think that GME's situation is unique, and it drove a lot of those other little mini squeezes that we saw all across the market. And let's be realistic, some of those companies are gone now, you know. There were winners and there were losers. And so for us to say otherwise would be silly. But all the same, do I think that AMC has a unique place in this story? Sure. And I'm in agreement with that. And I think that just because it's not exactly the same doesn't mean we can't Why can't we all just get along? I think it doesn't mean that we don't have some similarities, I guess is what I was trying to say. I don't know. This is retesting that support from the previous marker here. Which is right here. So you can see it's checking that. I don't know, man. Maybe. We might get a big advancement. If it happens, I'm excited about it. I would probably invest again in GME. I don't hold shares right now in it. So I look at it because people ask me to look at it, so I'll look at it. But I think if it broke out here and found support, I would be like all on board because I think it'd be a big move, potentially. I know there's already been a big move. I get it. But all the same, like that would be really significant, like way more significant than this early part. So. Let me see here. Let's go to the 1 hour on here. There's definitely like a narrowing price action happening right now on IWM. And I think that that's probably the beginnings of a pullback. An easy way to measure that is look at the distance travel here. It's probably in order to check the, like in this case, it would be like coming back down to check that 1 hour. Maybe get a gap fill back down to 200, but I don't think that's 100% necessary. Bigger picture wise, it's a disconcerting move because it makes us definitely look like it could easily be a hook. So we have to keep in mind, like, everything matters in the grand scheme of things. This could be a bottom on a trend, which is a positive. So that'd be like us taking this trend. Let's use an actual trend thing. Keep making like my trends out of lines. And I don't usually use the trend tool, which I don't even know where it is half the time. Parallel channel, that's what I mean. Yeah. I could see this as like a strong enough trend, this being like a halfway point. It kind of helps me to visualize it better. You can see that move up and then that move back down. Makes a lot of sense there. So locally, does that really affect a whole lot? No. Even if it dropped back down to 202, it doesn't really change much of anything. You can still see an advancement. I guess the reason I was worried about, yeah, it's kind of bonking its head on this. So there's two trend lines that I want to see. I would want to see what happens with them. One is that one I just drew, and the other one, if I can get this silly thing to work, is right here. That's really beautiful. What's your thought on AMC's? Just look at the way that worked out. It's like so perfect. That's crazy. If this happens, it's going to be like a gorgeous breakout. And if not, oh well. I think it would suck, but I mean, look at the setup here. It's so clean. It's so clean. Everything is right in its place. Yeah, it would be a crappy thing if it just dunked and then hooked and dunked again and hooked. But that setup is like perfect for the advancement. It puts everything right where it should be. Yeah, you can see it too. I mean, everything is right where it should be. Even this like bottom here, look at where that is. It's like right there. Super nice. Checks all the right boxes. Shoo! If we came to that point, I'm not gonna lie, I'd probably be like all in. I mean, I'm dead serious because that could be a really significant pop. You said, what are your thoughts on AMC's earnings tomorrow? For some reason, this one feels different, but I've listened to every call since the beginning. We got slapped on everyone. I think the market's going to set up with the same kind of trepidation, like the same kind of uncertainty. So my thoughts on earnings going into it is that price action will probably, unless something like leaks or something, and I can't predict that. There's no way I could predict that. So if that happens, I'm sorry. My thought is this is a narrowing right on the center of this top range. I think that's typically where you make a move from. I think the little micro range on the top, it comes across to me as distributive, which would make me feel like we're going to see a drop first. Maybe day of earnings or during the earnings call, we drop down to like at least below 304. The reason for that is very simple. It's just the way I'm interpreting this range, this tiny little pocket here. There's no other real reason for it. So if I'm wrong about that, then I'm wrong about everything. Does that make sense? Like if I didn't get this little bit right, I'm again shrugging my shoulders. It's kind of like, well, I don't know. Everything else could drastically change. But if I'm right about it, then we should see a drop to beneath 304 at least. And then from there, you really are whether or not you're going to get a spring or an LSPY on the next range up. That's the one that I'm a little bit more like curious about because I could totally see us having a spring action that goes even as low as like 260 or something, but not actually driving to a new low. And that might confuse some of you because you're like, well, wait, you said it kind of looked like March. Yeah, I know. And that would be the key difference is that this would be some kind of an LSPY motion instead of a spring. It's like a local spring here, but it's an LSPY on the bigger picture because it didn't make a new low. And I know that's kind of like a debatable topic because this is technically just like a selling climax and then you've got a reaccumulation potentially. So that this isn't even necessarily in play unless you break beneath this range. So if you come down below 284 and hook and you reject on 284 and heads low, then we're talking about a dip down to low liquidity. And unfortunately, that brings about a lot of questions of possible slides. Otherwise, I'm feeling really good about it. I know that that's a hard thing because we've had crappy earnings. Our earnings have been fine. The calls have been so-so. I'm a mixed bag on those. But the earnings themselves have been okay. It's just that the price action has been weak. There's no buyers there, and there's no stopping power. And then the actual end result of earnings has been dilution the last two times. That's kind of what the market's waited for. They've waited for the dilution and then dumped it. We don't think there's going to be that this time. I think most people don't generally agree that the last offering may not be done. It's hard to say. It really is. Maybe it's happening right here, right now, but I don't know. Long term, it would be very significant if this was a really good earnings and we had a good recovery, whether that's a spring or an immediate move to the upside. So do I think you're warranted? Yeah, it is different than the previous one. But, and you all know this without me saying it, I'm a big, I always say but or however, because there are things about a distribution that look a lot like a reaccumulation. I've mentioned this previously. And there's things about a redistribution that look a lot like accumulation. Those two pairs, those two setups in pairs, look very similar to each other. In Wyckoff terms, the main differences often are in volume and volatility, and typically accumulation ends with a whimper, and there tends to be a lot less volatility. Okay? Relative to where we are, some people might say this is high volatility, but it's been pretty chill like the last few times. I really don't feel like the volatility has been super obvious since maybe back here on these big moves. There wasn't really much to say last time at all other than that peak. So like one little tiny, going up like 5 cents above this top and then having that big sell-off and then doing again an advancement with a sell-off, that was it. Like that's all I had. That's all I was going off of last time because everything else looked pretty mellow. And unfortunately, like sometimes that's what you're left with. So this time I think it's different. You've got obviously more volume in these two buy-ins. Yeah, it's a rising shrinking, so it brings a lot into question. I do think it's possible to get a spring. I do think it's possible the spring just dips beneath 284 and then reverses. I don't think the spring has to come down to a new low. And if you're of that mindset, it's probably because you think the top is really distributive. I can't agree with that right now. I think that this local top, this tiny little one, could be distribution. And it looks like a distribution to me. So that's why I'm thinking it goes below 304. I don't think the larger one does. I just don't. Yeah, there's a lot of high volume in these two tops. I get it. But they didn't breach the wrong spots. They didn't come up too high. I don't know. And that's kind of all I could say. It's like sometimes that's all you have. You have just a few pennies to work with, and that's the analysis. And you might go over to Stockfather's channel, and he might be saying, no, it's distribution, and here's why. And that's fine. Like, he may have a completely different view. We often don't agree on the ranges because there's minutia there, you know. It's annoying. I wouldn't mind this drop right here because I think this would be a really solid way to advance. Bouncing right off of 315 and jumping would be more obvious and might help you all make better decisions potentially, but it also brings a lot of risk too. I don't know. It sounds bizarre, but in these situations when I'm not sure, or if I feel like I kind of have a beat on it, but I want to see a more definite movement, I usually prefer the downward movement because to me that usually is a good sign of a spring, and it has to be the right kind of downward movement. I'm not talking about after it's made these up thrusts, you know what I mean, and piddle along and weakly broken down on a creek. That's not what I'm talking about. I'm talking about like it's got a decent range. It looks healthy enough. It's sitting in the middle. I'd almost rather see it nosedive for a spring than like try to rock it for, you know, something that unfortunately we don't know but could end up being distributive. Well, how do you know, Booksy? It's not. This is why this kind of analysis, Wyckoff's great, but I kind of hate Wyckoff when you're in the middle of a range because all we really have here is, in my opinion, is like a bottom, like support that has followed by kind of an auto reaction. And maybe like you could argue that this is an auto reaction and this is early support. This is phase B support, and then this is phase B top, in which case you're just looking at that micro. And that'd be crazy, you know. But that could then, again, be like this idea that maybe we jump down for a spring action. You know. I mean, there's a lot of ways to interpret this. If this is a little reaccumulation, you might interpret it more as like a distribution rather if this is not reaccumulation, but you could interpret this range as like a buying climax with a top and it's distributive, or you can interpret it as this is the actual phase B top. And this is what bothers me about Wyckoff, and I'm just going to critique it, and I think most Wycoffians would actually agree, is that the phase B is kind of awful. Like once you see the markers appear, it becomes a little easier. But before that happens, phase B is completely, it's like wandering around in the dark because you really don't know. you have ideas maybe on where you came down, like maybe that gives you some idea of where we might settle. But a phase B is very unpredictable because it can take a lot of time. And that's why a lot of Wyckofians don't trade it. They just don't touch it. And I don't think it's their fault. I think it's just the nature of the market. Like when you're in the middle of a range, there's kind of like, yeah, I mean, there's kind of nowhere to go. You know, you can go any direction, and you're just kind of waiting. I'm overall bullish on this, though. I really am. So don't hear me wrong. I'm not saying like it has to be this way or that way, but I think on the whole, I'm pretty bullish on this earnings. If we drop, those are my markers. And I do think it's possible we could drop and see that kind of a move. Yeah, I'm trying to think if there's anything else noteworthy. Not really. I mean, we could talk all day about little creeks here and there and just see what's what. You know, we could try to analyze whether this is like an LSPY or if it's some kind of a bottoming action. I mean, there's all kinds of stuff we could do on the minutia. It'd probably be easier for most people, and I think this is where I'm at, to just kind of think more long term and not worry so much about the next 2 days. Yeah, and I know that you know, our Discord group's good. We have a good Discord, and there's a lot of people in there that use their brain really well and think of good ideas. And there's some people that have different opinions about it. So if you want a different opinion, you can go to that group and talk it out. Not everybody is as bullish. Some folks are really looking for that $1.60 kind of mark. I found that target. It's there. It's evident that that's a possibility to me. I just think that there's a strong enough case here. He might, maybe in the morning, I don't know, release the 8K or any kind of 8K filing. Springs are tricky because they're rarely what people expect, you know? And they might come at a moment where you're ready for a triumph and then you feel like despair all of a sudden. And that's how it feels. And then all of a sudden it turns and you're like, oh, well, it's not that bad. And that's what makes them effective. It wouldn't be effective if everybody knew they were coming. So I don't know, man. I would like for us to drop to like $3 and then just tear out of here. I think that would be my preferred. If you had to give me control, I would be like, yeah, that'd be my favorite way to go. That'd be my favorite way to move here. But I just want to make it as clear as possible that I think there's a strong chance of a bigger retracement. How low do we go before we break down? Well, and this is the good thing, okay? So if you're kind of like annoyed with what I've been talking about and you're thinking like, well, look, man, you've kind of gone back and forth, back and forth, back and forth. You have your levels. Clearly, you don't know what you're talking about. You think it's going to go here, and maybe it'll go there, maybe not. But I think one thing that would be pretty significant to look at would be to just say, like, consider that normally under these circumstances, we're in a bad situation where, like, all of our creeks are leading us to, like, doom because we've been just floating, and we're worried because if we do break down, we're going to drive really, really low. I'm not really feeling that now. Like, $1.60 is kind of as far as I would go with it for now, and I don't really agree if people saying much lower. And frankly, like, most of these moves have been fairly predictable, like these kind of moves. And the thing is like that low creek that we've already kind of double bottomed on, that doesn't really strike me as like a serious drop, because if we drop to that right now, we don't even make a new low. So I'm telling you, it would have to be like an instant drop. But if we dropped in a few days, yeah, I mean, in like a week, sure, then it's a slightly new low, but it's not that low. It's like 234. You see why that's like different than some other times where we've come through these things and we're like, oh, if we drop, we're going to fall all the way down to like $1. You know what I mean? Like, it's not that dramatic, but there's been a lot of times like that where it's felt like there's nowhere to go. The only case I can make for that is a waveform breakdown. And if you have a waveform breakdown, that's where I got that $1.60 target from. Because a waveform breakdown leads you down to here to like $1.60. If this waves and drops here, that's it. You know what I mean? Like, that's the only argument I can find. And that's not, I know it sounds awful. It's like, man, that's another low. But it's kind of like, I don't want to say we're running out of room, but that's sort of how it feels. Like, we've made advancements up and over, and now we're at the top of this thing again. We're waiting for this earnings to go through. The setup's not that bad. And you have to remember that in the end, this, no matter what happens, y'all, I am hesitant to guarantee anything, but I'm going to try my best to guarantee this, because at least from what I've seen, 100% of the time, when you get to the last part, no matter what you're going to do, when you're taking off, whether it's a spring or an LPS, you don't actually go down to the final creek. It just doesn't happen. There's always a creek that's kind of left unchecked at the very, very, very end. It's kind of this, I don't talk about it a lot because it's not really something that really matters to us very much, but it's always there. Anytime we've had a takeoff, there's been a creek that wasn't checked. Like, always. Like, we just didn't quite get there, and we never will. You know, that happened in 2020. Like, there was a really obvious creek that just never got checked. It happened in the March run-up. So, yeah, like, I concern myself with those things to a point, and I'm like, all right, well, definitely, you know, looking at this from the helicopter view, it looks a little bit like just an M, which maybe would just drop you back down. But at the end of the day, like, there's always been at least one of those. And I know the historic one that we always like to think of is the 2021. That's the one that I think is super obvious. It's like, I think it's this guy right here. Right, so it goes like almost there, but like not quite. Doesn't really check it. And then there's another bigger one. Where is that? Right, so like that's the 50-50, but if you look at like where the actual jump was, it's like down here. And there's never a check on that creek ever again. Even like after the jump, it barely even comes back down. And even if you use that bottom as like that's where it is, it doesn't ever come back down. Like, it just doesn't ever reach it again. In fact, I think the 50-50 might be the only way you can kind of argue that maybe it did on the sine wave come back and check it. But even that, it never quite gets there. That's it right there. It like doesn't ever come. So all three of those, no matter how you draw them, yeah, none of them really have a full chest. They just don't. So once the stock's ready to go, the stock's ready to go. We may be in a situation where we're in this kind of final stage. We could be in one of these moments right here where it's about to go down low, but that doesn't mean it has to go to $1.60. Like, it just doesn't mean that, you know? It just means that if it did drop, that you're now in that territory of like, all right, well, as soon as we come and breach new lows, 237, you could get the rebound. You just need to see it stop. That's why I put stopping power here, because everything below this to me is like turnaround potential, even if it did drop that far. Does that make sense? I don't put a lot of credibility into that final, I guess what I'm trying to say is I don't put a lot of credibility into that final drop there. And what's interesting about this right now is if you look at there's no pointing down, which is highly unusual. Usually when we have these repeated, here's an example right here. Usually when we have these repeated up thrusts, if you go to the previous one and you do like a waveform where you do like a 50-50 move, you can see like how evident that was, like going downward. Like there was a weakness there, and as it's going forward, each of these is sloping more and more down. And it's accelerating. It's getting to a point where it's starting to like look more to the downside. Like this one looks a little more up. And then as you move forward, it's like, oh, well, every single time this happens, there's like a growing weakness and it's pushing it down. I'm not feeling that right now. Like you've got one right here that's kind of like there, and then if you actually look at the next one, it actually is going outward. So it's going more out. And I'm being honest, I'm not trying to fudge it or anything. There's just no way to draw it where that's not the case. Like even if I were drawing it here and sort of using the first point as the top, not the second point, it'd still be there. It's like not really advancing the way that you would expect. That kind of, it is dropping, but it's not like that. Not like the previous one where it's like super, super different. These almost look parallel. You may not care about that. Every time we've seen these kind of downward moves, they're almost always like pointing to, kind of like an echolocation. They're kind of pointing to a region that you're going to go check out. And you can kind of tell. We could extend these out and you can sort of see like, oh, they're sort of all going down towards these like lower marks here. Trying to catch these lower bills. Some of them even intersect like right here. That one intersected right on that target when it did drop. I don't know, maybe. But that'd be like way out there somewhere. Way over here. I guess it's possible that it's accelerating down. I just don't see it. These two would be like that, I suppose. Or maybe the right way to put it is like if it's accelerating down, it's doing so on like diminishing returns. Like it looks like it's narrowing into like an earnings kind of move. So it's kind of erasing itself. Like the timing for it would be like this, for example, these two right here. I suppose if you wanted to argue, no, it's going down. The others look parallel. So I'm not going to argue about that. Those two first ones look almost parallel. There's a slight increase, but it's not like previously where you had this massive increase. These waveforms, they're not really doing that. And to me, it looks like, I don't know, like, say like again. Yeah, I suppose if that were the case, it's just significantly different. It may seem like I'm grasping at straws, but I'm really like saying that, like, to me, it's like that cross is so early that it's already passed. Like the time is passed. Strange. It's a strange way to do an analysis, but there's usually some kind of a massive acceleration that happens. Yeah, that one's pretty self-evident. These two might be a little more like on point than the others. Because this one actually has like a narrowing action that seems to... see what the price is there. I don't know. It just kind of seems like it's maybe leaving it behind a little bit. Now I could do the same thing to the upside. I'm not doing that to the upside, but we could do the same thing to the upside. And it would work about the same. Yeah, this one makes it look like 237. So it's kind of like that same deal of like, okay, but that's just the bottom. So that's kind of a significant point of contact there. Yeah, GME looks good. It hasn't breached the top yet. This is healthy. It could tomorrow, or it could distribute. It doesn't really matter, because if at this point it came back down, it wouldn't be that bad. If this is just a buy-in to kind of get that advance back to the top and sell it off again, you'll see it break that trend. And if it broke that trend, who cares? Like, you still have a lot of room below. And frankly, coming back down to recheck that bigger trend here would probably be good, be beneficial. And if it didn't, then that just means there's not enough sellers. So that's also positive from my point of view. Yeah, earnings is tomorrow. It's probably after hours. Tomorrow will be a big day. I will not be streaming all day. I will be out going to do my kung fu lessons tomorrow, and I'll probably be gone most of the morning. I'll be back probably before close, and I'll stream, and I'll try to see if I can do... Well, actually, no, I have a meeting tomorrow too. I may not be able to be on at all until earnings, and then I can stream earnings. So tomorrow will be a weird day for me. I probably won't be very active at all. Yeah. So place your bets, I guess. All right. Well, it's 2:55. I don't really care about the last 5 minutes. Let's kind of see what happens, I guess. Yeah, I mean, I didn't do that with the upside, but you can do it with the upside as well. I should have been fair about it. I mentioned it, and then I didn't actually do it. So for the upside, it's the same deal. You just do it in reverse. So I know you can do it with the downside, but you can also do it with upside. And that also results in a pretty interesting trend here, because I think that's accelerating. Yeah, it looks like a mild acceleration, and it looks like it intercepts way up here like 750. I wouldn't put a whole lot of emphasis on that. Those are trajectory lines. They don't always matter that much, but they're it's like they're not relevant until they are, and then all of a sudden they're like super relevant, and you're like, oh, okay. Everything was like pointing towards this and that, and you're like, okay, now I think I understand why I should care about them. But yeah, I'm seeing this as a possibility too. You see how there's a bull side that's pushing us up to this 392 and then up to 7. It's kind of like the direction of the stock going upward, and that's showing a little bit of strength for sure. So thank you very much, CPR. Appreciate it. Shout out for that. Really do. Yeah, I don't know. Looks good. If I have time, I'll do an earnings thing tonight, like a recap vid. but I'm not sure I'm gonna have a lot of time. So I can't promise it. I keep promising I'll do that, and then I don't do it. I think the analysis today was probably all I wanted to say, though. So if you've already been listening, I'm not going to say anything new. I'll just try to go over, I'll outline what I think about these areas and these little pockets and the possibility of that downside versus the upside. So, all right. You guys, debt restructure news would be a big deal, yeah. And everything else, with anything positive about AMC could be very good, but earnings is not always about the news. It's very rarely about that. So kind of like just see the setup for what it is, recognize the directional movements when they happen, and then find those places where you know you're going to have confirmation. I'm telling y'all that you could try to read a spring into it, but the best way to trade this with confirmation is without a doubt waiting for it to go over 350 and then finding that support. I mean, it's that simple. So if you don't want to place bets on it, then don't. It's not worth it. Throw money away on a gamble when you can just wait and see. Because it will break out and go over 350 and come back and find support and then go if it's bullish. Break out, advance the creek, support, and then jump. So jump the creek, come back, find support, and then go. Simple.